How the rich really make money during crises. Did you know that while most people lose money during a crisis, the wealthiest can actually double their net worth? It sounds impossible, until you discover the strategies they use behind the scenes. In today's episode, we'll uncover the mechanisms rarely discussed openly, the methods the world's richest use not only to protect their wealth during crises, but often to earn more than during times of growth. These strategies may look like financial wizardry, but in reality they're built on logic, psychology, and hard data. And the best part? Many of them can be applied on a smaller scale, even with a limited budget. Get ready, because once you understand how these tactics work, you'll never look at a crisis the same way again. 1. The rich don't react emotionally, they react systematically. When markets start falling, most people panic. The wealthy don't. They follow predefined procedures, literally checklists created long before the crisis even begins. They use automated tools, analyze historical data, and compare current events with past downturns. That's why they see something the crowd rarely notices: the biggest price drops often become the biggest opportunities of the decade. 2. Diversification on a level most people never experience. Most investors keep one portfolio in one place. The wealthy spread their assets across multiple classes, and often multiple countries. Beyond classic stocks and bonds, they hold commodities, land, business equity, commercial real estate, and even alternative assets like investment-grade whiskey or fine art. During a crisis, some assets fall, others rise, and some stay stable, and that balance is what keeps the wealthy safe. 3. Contrarian investing. Contrarian investing means buying when everyone else is selling, but never blindly. The wealthy understand long-term cycles. They identify which sectors are truly undervalued and which only appear cheap. In turbulent times, they return to fundamentals, looking at real business value and whether price drops come from panic or genuine problems. This is why the greatest fortunes are often built in the darkest moments. 4. Using cheap capital. During crises, central banks often lower interest rates to stimulate the economy. For most people, that simply means cheaper loans. For the wealthy, it means opportunity. When capital becomes cheap, they can borrow millions at minimal cost and invest in assets with the potential to rise 50%, 100%, or more. This is one of the most powerful engines of wealth creation. 5. Acquiring business assets. Crises always create opportunities for strategic acquisitions. Companies with strong products and loyal customers can still run into liquidity issues. For the average person, that's a disaster. For the wealthy, it's a chance to buy valuable equity at a fraction of its true worth. History shows that many post-crisis investments later turned into billion-dollar giants, especially after 2008. 6. Understanding market cycles. The rich know that crises aren't rare anomalies, they are a natural part of the financial cycle. They understand bubbles, euphoria, panic, and market bottoms. While others see chaos, they see patterns. And when the average person pulls cash out of fear, the wealthy position themselves to buy the very assets that will generate the highest returns in the recovery. Summary. The rich don't build wealth through luck, they build it through knowledge and calm decision-making when everyone else loses control. A crisis can be your greatest enemy or your greatest ally, and the difference comes down to preparation. If you enjoyed today's episode, subscribe to Make Money with Panda, hit the like button,